And what I'm going to do, guys, is I'm going to, like all my webinars, I'm trying to just keep things very simple because I think, what happens is with things like commodities, it's a new segment, and many people, because, they try to learn about it and it gets so complicated and confusing, and they get paralyzed by all the information, right? So what I'm going to do is I'm going to keep it very simple, and I'm just going to go very high level. This is a very high level introduction to commodities, okay? Nothing complicated. I'm not going to get into trading strategies today. Okay, we're just going to talk about what commodities are, and specifically, what products are traded and how to trade them. Okay, does that sound good? If that sounds good, please say yes. Right, I want to hear a lot of questions from you guys. Please keep asking questions. All right, please be very, very engaged. The more engaged you are, the better the webinar is. Okay, all right, let's begin. So, introduction to commodities. So before I start, you guys should know the Trade Academy is the same as Upstocks, right? You guys all know that. Upstocks, Trade Academy are the same company. Trade Academy is the educational arm of Upstocks. We're also backed by a wonderful group of investors, including Kalari Capital. They're probably the foremost venture capitalist firm in India, and also by GVK, and of course, Mr. Ratan Tata, right? We're very honored to have him as a part of our board. And the goal of Trade Academy is very simple. We want to produce a community of profitable, successful traders. And we're doing that. We're doing that through webinars and through education initiatives. And we teach trading strategies every single day for free. Okay? So that is webinars. And of course, we have Scanner. Okay, Scanner is our amazing product. Our users love it, and I will answer all your questions on Scanner at the end of the webinar. Okay, I'm also going to tell you what we're working on. Before I continue, book a Chota class. Chota class is just 500 rupees, and it's basically premium webinars. Okay, so if you like the webinars, you will love Chota class. I'm taking a Chota class on Wednesday. Okay. Milan is taking one on Tuesday on investing through technical analysis. It's going to be 2 hours long, usually 2.5 hours long, and he covers a comprehensive trading strategy from start to finish, and it's only 500 rupees. I'm taking one on Wednesday on options pricing, and you can learn about advanced options spreads by Pradeep on Thursday. Okay, so book a Chota class. I'm going to give you the link right here. That is the link. Perfect. Okay. Okay, let's continue. I'm seeing some questions here. So GVK Infra, no, not GVK Infra. It's the entire GVK conglomerate. Okay. That's the first time I'm getting a question on GVK. All right. So MCX and NCDEX. Can one of you tell me the difference between MCX and NCDEX? I'm sure most of you know the difference, but what is the difference between MCX and NCDEX? What is the difference between these two exchanges? You guys should all know this. This is pretty common knowledge. There you go. Nataraj got the answer. Fantastic, right? So Nataraj is saying MCX does metals and energy, and NCX does agri-commodities. Nice, right? Now, technically, guys, MCX is also getting into agri-commodities, and the turnover is picking up a lot on MCX for agriculture commodities, okay? Now, right, so these are the two major commodities exchanges in India. There used to be more, but over time it's kind of consolidated into these two. And like Dr. Raj said, MCX is popular for metals and energy products, right? So things like gold, platinum, silver, and crude oil, and also natural gas. You can also trade natural gas now on MCX. and NCDEX is popular for agricultural products. Okay, so any sort of agricultural product is going to be mostly traded on NCDEX. But like I said, agri products are also picking up very, very fast on MCX as well. So you can see things like cotton, are traded extensively on MCX as well. And later on, when we go to the most active contracts, you can see that there are some agri products listed on MCX as well that are very active. And on Upstocks Pro, you can actually trade MCX. Okay, you have to pay for the second segment. I believe it's 350 rupees. But once you do that, you can trade MCX on Upstocks Pro. Okay, so Prakash is saying he already started trading black pepper. Nice. That's a very unique product. I didn't know you could trade that. Very cool. All right, so there's all sorts of different products traded on commodities. Ashish is asking whether we can trade NCDEX on Upstocks. Nope, you cannot, right? And very cool, Prakash is trading black pepper on MCX. Wow, very cool. And the market timings of MCX is very unique, okay? And at Upstocks Pro, it's very, it becomes a little difficult for us to make sure that there's always people staffed because the hours are very, very different. It opens at 10 and goes all the way through 11:30 at night. And actually for 2 months of the year, it's actually open until right before midnight. So it closes at 11:55 p.m., okay? So basically, it's open for 13 to 14 hours a day, okay? And on Saturdays, if you want to trade agri products, it's also open from 10 to 2 on Saturdays, 10 to 2 p.m., okay? And what you should know here is, this is very unique, commodities, because it's open till 11:30, it's also overlapping with the U.S. Okay, so things like the Chicago Mercantile Exchange, where a lot of commodities are traded, and it's the biggest commodities exchange in the world, that's open while Indian markets are open as well. So what happens is there's a lot of arbitrage, international arbitrage, that gets done. So a lot of commodities trading is also just pure arbitrage, not just on within the MCX, on the big contracts and the mini contracts, but also between international exchanges. Okay, I'm seeing some questions here. So Garthi is saying he's not able to understand what I'm saying. Garthi, you should be able to understand what I'm saying. If you don't know what if you can't understand what I'm saying, maybe you're having some mic or speaker issues. It should be loud and clear, right? Guys, can you hear me? I want to make sure everybody can hear me right now. If you cannot hear me, okay, you can all hear me. Fine. Okay. That's what I'm saying. Audio clear. Nice. Right. So Nilutpal is asking me to explain arbitrage a little bit. So Nilutpal, the way that what happens is there's arbitrage done between international markets. Okay. So what happens is say crude oil, right? So crude oil is priced in rupees, obviously, right, in India. And what happens is it's quoted in barrels. Okay. Now it's also quoted in barrels in the U.S. Now what happens is because there's so much more turnover that happens in the U.S. Okay, and because it's quoted in dollars, what happens is if you want to do international arbitrage, you need to basically have a price feed for what's being quoted in the U.S. Okay. Now, guys, I'm not, so I'm not going to be able to tell you exactly how to do this, but I know that it's possible because I do have many friends who do arbitrage for a living. Okay. And essentially, if you can get some sort of a price feed going, live, where you can get the crude oil price in the U.S. in dollars, you can basically convert that to rupees. If you can get the spot FX rate for dollars to rupees, And once you do that, you can basically do arbitrage between that price and what's being quoted on the MCX. Does that make sense? Right? Right. So Josh is saying yes. Right. So that's basically how that happens. I don't know exactly. Right. So I mean, I don't know exactly what price feed you're going to have to subscribe to. Right. We don't provide the Chicago Mercantile Exchange price feed. Prakash, I don't know the exact U.S. exchange timings. I believe it's around 9 EST to 9 o'clock a.m. EST all the way through the night. Okay, but you can definitely look that up. You can just do a quick Google search and you can look it up. Okay. Ashish, so crude oil is not traded on Saturdays. So only agricultural products are traded on Saturdays. Okay. Okay. So let's continue. Now these are the common products traded. Okay. Now you can see here that there's all sorts of different products traded, right? Prakash mentioned that he trades black pepper. That's not even mentioned here. Okay. Now that being said, these are 14 categories of products that are traded: aluminum, cardamom, copper, cotton, crude oil, gold, right, all the way down. Now out of these, what you can basically actively trade are going to be copper, cotton, crude, gold, lead, nickel, silver, and zinc. Okay, and natural gas. Okay, these are the active products, and if I continue here, you can see here, right? So if I sort it by the most active contracts by value, you can see that crude oil is definitely, like I said earlier, the most active. Okay, and we're going to get to crude oil very soon. Then you have, obviously bullion. You have gold. Then you have zinc. Okay, silver, copper. Then you have gold again. You can see, interestingly, that the second contract of gold, right, the next contract is actually more liquid than gold mini. That's interesting, right? Then you have lead. There's a lot of arbitrage that gets done between lead and other commodities. And then you have mint oil, and then you have things like cotton, right? So Guru's asking, can it be done manual, or is it suitable for algo trading for international arbitrage? Honestly, Guru, I don't know. But you know what? It's probably not that difficult to get set up, guys. If you're interested in international arbitrage, try to look into a cheap price feed for the U.S., right? And generally speaking, this is how any sort of strategy works. The higher the barriers to entry are, the easier it is going to be to make money. Okay, so because you have to go through some work to get that price feed, if you can get that price feed, my guess would be that you can probably find some opportunities, right? But you should look into getting a price feed going. Okay. So Prakash just told me something very interesting. So MCX and NCDEX has launched black pepper futures contracts from 24th of July. Very interesting, right? I didn't know that. That's very interesting, Prakash. Prakash, so please let me know after the webinar. I will give you 1 day of free scanner usage, okay, because I love this little tidbit of information. So please tell me your email address and I will add 1 day of scanner usage for you, okay? You're welcome, Prakash. Okay, so let's continue. Right, so we can see here also something very interesting. You can see that, after cotton, things kind of fall, right? This is not that much turnover, guys. This is basically 53 crores, okay? And even if you look at it in lots, you're talking about, 1,000 plus lots, right? So in terms of number of trades done, it's not going to be that much. So in essence, okay, there aren't that many contracts you can actually trade in MCX. Okay, this is kind of unfortunate. Yes, Ibn Rajaj is mentioning that natural gas doesn't feature in most active contracts. Yes, that's exactly right. Right, you would expect things like gold mini and and crude mini to be mentioned here, but they're not. Okay, so you should understand that there aren't that many contracts that can be traded. Now, thing about gold mini and crude oil mini is I'm sorting this by value, right? So if I was to sort it by volume, they would show up here. But my point is there aren't that many products that can actually be traded realistically. I mean, you can, if you want to hold on to it for the longer term, you can do that. But I'm talking about actual trading. There aren't going to be that many. Okay. And like I said, these are the primary products that are traded. So what I'm going to do today is I'm just going to cover, for the, because we don't have that much time, right? I want to make sure that we finish this webinar in 40 minutes. So I'm just going to go through two products. I'm going to go through gold and crude oil, okay? Just so we can make sure that we can wrap things up in 40 minutes, because why do we have to spend more time than required, right? Does that sound good? If that's okay, please say yes. Right? I want to make sure that you guys are all okay with me just covering gold and crude oil. Okay? All right, guys. So some of you are asking for more products. Let me do that in a second webinar. Okay, I can do that in a more in-depth webinar on commodities. And guys, please keep sending emails on what kind of webinars you would like for us to conduct, right? Okay, so let's start with gold, right? We all love gold. Gold is, one of the most valued, products in the world, commodities in the world, and it's really, ageless, right? It's been, one of the most valued commodities for a long, long time. Now, there's actually 4 different types of gold products listed on MCX. So you have gold, and this is also, sometimes called the big gold, okay? Then you have gold mini, then you have gold guinea, and then you have gold petal, okay? And you can probably guess what gold petal is. It's a very, very small, increment of gold, basically, right? Because what happens is if you want to trade big gold, you have to actually put up a lot of margin. So if you want to trade something in very small increments, you can actually trade gold petal. But the problem with gold petal and gold guinea is that they're just not that liquid, okay? So practically speaking, if you want to make sure you get a good spread and you're not paying too much, for capturing that spread, you should just stick to big gold and gold mini, okay? Like I said, there's a lot of other products out there, but you just want to stick to these two, okay? Gold and gold mini. Now, so this information was taken from MCX thing, obviously. This is from Upstocks Pro, and this is actually from Zero the Varsity, okay? Because they've done a very, very good job in explaining a lot of this stuff. Now, you can see here that the lot size, so let me take a step back here. If you want to trade MCX, you have to understand how futures works, right? Just like how I took a webinar yesterday on currency futures, and I mentioned that you have to understand how futures works. Okay, so things like lot sizes, expiries, all these things you have to understand before you trade MCX. Okay, it's very, very important. Now, the lot size for gold, and I'm talking about big gold right now, is 1 kilogram. Okay, which seems like a lot, right? And it is a lot. And what happens is the tick size is 1 rupees, right? So here you can see here is that 28,590, right? So if it goes up 1 tick, it'll go up to 591. If it goes down, it goes to 589. And essentially what happens is because this price is the number of rupees per 10 grams, okay? That includes all taxes. What that basically means is so if it goes up 1 rupee, that's basically 1 rupee per 10 grams, right? Now, because you have to buy, in terms of 1 kilogram, essentially 1 tick is going to be 100 rupees. Does that make sense? Does that make sense? I want to make sure you followed everything I said, because that's actually very important. You have to understand exactly how this works, right? You guys are all saying yes. Okay, cool. Okay, so that's basically how the tick size works. Okay. Now, don't get so caught up into the delivery logic. In essence, what happens is if you're trading currency futures or equity futures, everything is settled in cash, right? But with commodities, it's actually delivered, or it's actually settled in delivery, physical delivery of the product. Now, if you're executing through Upstocks Pro, you actually have to, square up your position before expiry. Okay, so don't hold on to futures positions until expiry, right? Just like how on equity futures you don't want to do that. Same thing. You want to, square up your position before expiry. Okay. Now let's look at the margin. Okay. Now, if you look at the price here, 20,590, right? Now, if I want to basically buy one lot, it's going to be basically 100 into 28,590, right? So that's basically around 28.5 lakhs, right? So that's the required actual amount for one lot in terms of the actual physical turnover done, right? The turnover done is going to be 20,590 into 100. Now, how much margin do I actually have to put up? Well, with Upstocks Pro, you have to put up 1.14 lakhs, okay, for one lot. So basically, what this comes out to is, right, it's going to be right around 4%. Does that make sense? Right, because the actual amount being transacted is, 28.6 lakhs, right? But I have to put up 1.14 lakhs for one lot. So Ashish is asking, how is this calculated? So let's take a step back, right? So what happens is, if I'm buying one lot, Ashish, it's 100 into 28,590 because I'm buying 1 kilogram when I'm doing one lot. And because this is being quoted in, a rupees per 10 grams, right? So if I do 1 kilogram divided by 10 grams, that's 100. So 100 into 28,590 is 28.6 lakhs. Okay. Now if I use the Upstocks Pro calculator, okay, that's going to be right here. Now what happens is, if I change this to gold, okay, and if I add it, you can see that the required margin is 1.14 lakhs, right? So that's how I'm calculating this. And basically 1.14 lakhs divided by that total amount comes out to around 4%. Prakash, this is decided by, the span margin is decided by the exchange, right? It's just like how any other span margin calculator works. So Hidden is asking, so Nataraj, this is for positional, right? I actually asked our RMS team today itself because I was going through our calculators and I've asked them to actually, put up the margin for MIS, okay? Because I don't know the margin off the top of my head for MIS. So Hidden is asking, if I buy 1 kilogram, is that equal to 1,000 grams? Yes, right? But what happens, Hidden, is because it's being quoted for 10 grams, that's why I multiply by 100. Dheeraj is asking me, is Trade Academy working on any commodities trading strategy? Yes, it is, Dheeraj. We're working on 4 different strategies: futures, options, actually 5, futures, options, so equity futures, right? And then Nifty options, Nifty futures, positional, and MCX, right? So we're working on 5 different strategies. Yeah, it's a lot of work, guys. and we're going to launch them 1 week at a time, most likely. So Ajay is asking, apart from timings, what edge does trading commodities give over equity trading? Just asking because it looks complex rather than equities. That's very true, Ajay. It does look complex. Right now, you know, I'm a big fan of game theory, and I'm a big fan of looking at things in terms of the barriers to entry. And I think like, I mean, this is my opinion. I think that when you deal with commodities, because there's less participants, there's a bigger opportunity to make money, okay? Because you can actually use strategies that others are not using. And so therefore, when it comes to your competitive landscape, I do feel that things like commodities can present new opportunities. There's so many people looking at equities and Nifty that you know, it becomes difficult, right? So for example, if I'm looking at large cap stocks versus small cap stocks, if you use a strategy on small cap stocks, you should be able to make more money because there's less people looking at them, right? Same thing with commodities versus equities, okay? And also because commodities is also based on you know, geopolitical you know, situations, right? So for example, with crude oil, right? Crude oil is always in the news, right? Because there's so many things happening. So for example, if they find new oil, right, that's going to bring the price down because of supply demand, right? Those things don't happen so much with equities. So if you're following, you know, global news, you can actually, you know, leverage that information into the commodity markets. Okay. All right, let's continue because there's a lot to cover, right? So, so like I said, the price is for 10 grams of gold. And guys, you know I'm just covering gold right now, but if you could understand gold, you can literally understand anything. You can understand silver, you can understand, you know, platinum, you can understand all the different metal products. And then when I go through crude oil, you can basically apply the same exact thing for, you know, natural gas and all the other you know, oil products, okay? So that's the contract size. That's the margin required, right, using the Upstocks Pro calculator. And therefore, you basically have to put up around 4%, right? And therefore, the profit loss for one tick is actually 100 rupees. That's a lot. And your break even, let me just go into full screen here. Your break even comes out to 5.76 rupees on Upstocks. Okay, and you know what? What I'm going to do is I'm actually going to see whether that goes down if I trade, you know, 10 lots. It does, right? So if I do 10 lots, it goes down because the brokerage is. So obviously, trading 10 lots is difficult because you have to put up a lot of margin. So if I do one lot, my break even is 5.76, right? So basically, this is a little less than 6 ticks. Okay. So you should keep this in mind, right? It's a little less than 6 ticks because you have to factor in your brokerage costs and everything else. And of course, here I'm assuming that you're trading on Upstocks Pro. Okay. Now, if you understand gold, you will understand gold mini. Okay. So gold mini is very, very similar to gold, except it's 1/10. Okay, so the price is once again being quoted, you know, the price per 10 grams. It's the same exact thing, right? Which means there's going to be a lot of arbitrage being done between gold and gold mini. And you know what? I actually put up the price for gold here. So let me put up the price for gold mini. That is incorrect. So let me look up the price for gold mini. Right? So you can see here that it's basically the same thing as gold. Okay, it's quoting your price per 10 grams, just like gold. And the benefit here is your lot size. Okay, for gold, your lot size is 1 kilogram, but here your lot size is per 100 grams. Okay, so therefore your required margin is not going to be. This is also incorrect. Okay, I put up the wrong information here. If I put up gold mini here, okay, and if I take out gold, okay, you can see that your margin is basically 1/10, right? So what's the benefit? What's the benefit of gold mini over gold? Okay. Well, obviously your margin, per contract is going to be less, right? So does that mean that gold mini is always better than gold? So I want to ask you, which contract should you trade? Should you trade gold mini or gold? I'm going to ask all of you this question. So Mukesh is saying gold mini. Arun is saying start with gold mini. Ashish is saying mini. Arun is saying to reduce P&L mini. Manish is saying we should trade according to our stop loss. And Nagu is asking a very good question. He's asking what has higher liquidity, right? Priya is saying whatever one can afford. Manish is saying looks like gold mini is good to me. And Xiaomia is asking as per liquidity, right? So very, very good answers. So guys, I mean, it depends on how much capital you have, right? If you cannot afford to trade gold, obviously you cannot trade gold, right? Now, when it comes to your stop loss is going to be the same, right? Because the pricing is the same on both, right? So whether you're trading gold mini or gold, it's going to be priced exactly the same. It might be priced a little lower on one, in which case maybe you want to execute that contract because the price is lower, right? But it really depends on one more thing, and that's what Nagu and Shamya both said, that's going to be the liquidity, okay? Because what you want to do is, so if I go back to the most active contracts here, okay, it's going to be right here, right? So your most active contracts are, so gold is number 2, okay? And you can see that the total traded value here is very high, right? It's very, very active and liquid. So if you look at gold mini, okay, so let's say I look at the total traded value here. So you can see the traded volume, right? It's 8,000 contracts, which is, I mean, it's okay, right? But it's not great, to be honest. So if I go back to market data, and if I'm trying to figure out how much turnover was done, okay, you can see that gold mini is not anywhere as much as gold. Okay, so if I pull up gold mini over here, okay, it's done 234 crores, right? Which is okay, right? It's not great. Now you might get a decent spread, okay, maybe, but if you can trade gold, I would trade gold. Now here's the thing, okay? When you're starting out, do not trade gold, right? Because you have to put up a lot of margin. So what you want to do is you actually want to begin trading, you want to trade gold mini initially, and once you're comfortable trading gold mini, if you have enough liquidity and margin, then I would actually say trade gold. Now don't trade more than what you would normally trade, okay? But you should obviously trade with the amount of risk that you're okay to trade with. But assuming you can put up the margin, you should actually trade gold because it's more liquid. Liquidity is key. Okay, now let me answer all your questions because I got a lot of questions in the last 2 minutes. So Hiran is asking, why don't you trade in agriculture commodities? There's no problem with NCDX, Hiran. It's just that Upstocks Pro doesn't provide it, right? So I want to make sure that these are things you can actually use using a trading platform. So that's why I'm just talking with MCX today. Okay. Xiaomia, the break-even is very simple. So Xiaomia is asking me, what is a break-even point? Break-even is basically the amount you have to cover to make a profit. Okay, so for example, if I enter the buy price of 28476, if I make the sell price 28477, right, I'm not making money. If I make it 28481, I'm still not making money, but it's very close. And if I make it 28482, I'm making money, right? Because it's 6 ticks above my buy price. Okay? Ashish is saying that means 10 rupees per tick. Yes, that's exactly right, Ashish, right? So for gold mini, it's going to be 10 rupees per tick. That's exactly right. Okay? Cool, right? So I hope all of you, understood what I said about gold versus gold mini. Okay, Karthi is asking me, is this the right time to enter gold? I don't know, Karthi. Okay, I don't trade gold. Okay, so that's a very dangerous question to answer because, we as Indians have a lot of opinions on gold, right? We love gold, so I don't want to tell you whether it's a good time or bad time to buy gold. Okay. So Guru Darshan is saying in mini, 1 tick equals 10 rupees. Yes, that's exactly right, Guru. So Prakash is saying, is it the same? Will all the commodities be like crude? I don't know what you mean by that, Prakash. Okay. Karthi is saying in gold, quantity means 10 grams. So it's going to be your lot size, Karthi. So when you trade in lots, it's going to be based on the lot size. Okay. So for gold, for big gold, it's going to be in kilograms, and for gold mini, it's going to be per 100 grams. Okay. Ashish is saying any impact on USD INR future contracts on gold contracts. So I think you're asking me if gold moves, how does it affect the rupee? Right? So there is definitely a correlation there. There's going to be a very strong association between. So, one way you can look at it is the dollar, right? The dollar is king. Right? The U.S. dollar is king. And many times what happens is, so I don't know very much about gold, okay, but I do know that crude oil and the dollar are inversely proportional. So when crude oil prices, so when the dollar appreciates, crude oil prices go down, okay? And that's usually the case with gold as well. Okay? All right, let's continue. And expiry is very different for commodities. So you should look it up, per commodity. So for gold, it's actually every 2 months. Okay, so what happens is, for example, the current contract is going to be your August contract. That's going to be your most liquid contract, and it expires on the 5th. Okay, and new contracts are introduced every 2 months. Okay, so August and October, December, February, and so on. And what happens is, as soon as the August contract expires, your August contract for 2018 will be introduced. Okay? So nothing complicated. Just keep in mind that it's a 5th of every month, and it's basically every 2 months. Okay? So in a nutshell, you just want to trade the most liquid contract, right? Just like any other futures and options. So this goes back to what I was saying earlier. So you should also know this. The turnover done on gold is literally almost 10 to 1, okay? So I think I pulled it up earlier, but if you look at the total turnover done on gold, it's 10 to 1. So the number of lots traded is around the same, but the turnover done is much, much higher on gold, okay? And gold becomes the benchmark as well. So what happens is when you're looking to do some sort of arbitrage, gold mini actually follows gold. So when gold goes up, gold mini goes up. Okay. So like I said, if you can put, if you can put up the margin, trade gold versus gold mini. But if you're starting out, trade gold mini so that you can trade smaller amounts and you can put up smaller margin, less margin, okay? Does that make sense? So Nagu Nagu is asking me to speak more about arbitrage. So Nagu Nagu, I have actually never done arbitrage on commodities, okay? So I would not be the best person to talk about arbitrage on commodities. But what I'll do is I will take up a webinar on just commodities trading strategies, okay? Would that be good? Would you guys want me to take up a webinar on just commodity strategies? Right? Cool. All right. Guru Darshan is asking me to explain expiry. So expiry is very simple, Guru. So what you're doing here is, you know, on equities, it happens, on equity futures, it happens every month, right? So on commodities, every 2 months. And for equity FNO, it happens on the last Thursday, and here it happens on the 5th. The contract gets introduced. So on August, for example, on the 5th of August, the next contract will be introduced, okay? And there's 6 contracts that are always in circulation. All right? Okay, let's move forward. Now let's get to crude. Okay, now guys, crude oil is the most watched commodity in the world. Okay, when it comes to trading, speculation. Okay, I'm not talking about gold and crude oil in terms of people looking at the price, because that's going to be gold. But I'm talking about from a trading perspective and speculation perspective, it's definitely crude oil. Because there's so many things that are happening, right? And if you look at the crude oil price, so let me just pull up the price of crude oil, okay? So price of crude oil, right? And if you look at look at this chart, right? It is crazy. Look at that fall, right? I'm going to wait till this kind of zooms in a little bit. But basically, it's just crazy because it's extremely volatile, okay? Let me see if I can get a better resolution picture of this. So crude oil is very, very volatile. And what happens is when there's like any sort of geopolitical, you know, things happening around the world, if there's some sort of, you know, look at that. So look at this price of crude oil, right? It's literally, you know, it's extremely volatile due to things like OPEC, you know, and so when new oil gets discovered, or when there's a new technology when it comes to, you know, discovering and refining oil, there's all sorts of things happening around the world, and because of that, you know, the price of crude oil can fluctuate rapidly, right? And there's actually 2 different types of crude oil traded around the world. Now, only Brent crude oil is traded in India. So this is incorrect. This is going to be Brent, right, and WTI. Okay. So now there's 2 different types of contracts traded on the MCX. Okay, and the best way to look at this is what helps me look at crude oil, is that it's just like gold, right? Gold has a big gold and a gold mini. So crude oil is going to have a big crude oil, right? And it's going to have crude oil mini. So it's called crude oil and crude oil mini. And what happens is the price is quoted in terms of per barrel, okay? And what happens is, you know, just like in gold, you're buying 1 kilogram, right? Similarly, in crude oil, you're buying 100 barrels. And just like in gold, you know, 1 tick is 1 rupee. Similarly here, the tick size is 1 rupee as well. And just like gold, it's going to be 100 rupees per tick, right? Because you're buying 100. Because you're buying 100 barrels, right? So the price is being quoted in terms of rupees per barrel, okay? But because it's going to be 100 barrels, each tick is going to be 100 rupees. And the expiry of crude oil is very weird, okay? I have not been able to figure this out. If any of you know how this works, please enlighten me. I know that it's either the 19th, 18th, or 17th or 20th or 21st, okay? And I can't figure out the logic. So if one of you can tell me the exact logic for how the expiration works, I'll. So like I said, a good way to kind of look at crude oil is it's just like how big gold behaves, okay? And so let me just zoom in here. So this is the Upstocks Pro calculator, right? And this is the August expiry, right? We can see here that it's expiring on 21st August. Okay, now the margin for one contract is going to be 27,500 rupees. Okay, but if you look at the actual turnover, the actual contract size, it's going to be 3,161 into 100, right? So that's basically 3.16 lakhs. So therefore, your margin that you're getting is around almost 9%. So it's not as good as gold, right? But you still only have to put up 8.7% margin. Okay. So I'm getting some questions here. So Guru Darshan is asking me whether the August contract expires on 5th October. No, so for gold, Guru Darshan, it's going to be expiring on 5th August, right? So the August contract for gold is going to be expiring on 5th August, right? And the October contract will be expiring on 5th October. Okay. I'm getting a request here for more webinars on commodities. Sure, no problem. Okay. Cool. So this is crude oil mini, right? So crude oil mini is just like gold mini. Okay. So once again, everything is 1/10. Okay. So what happens is the margin required for crude oil mini is going to be literally 1/10 of crude oil. Okay. Right. If I pull up the calculator, I can see that crude oil mini is going to be 1/10 of crude oil. Okay. Right. So this is 2,700 rupees. So it's very, very little, and this makes it very, very easy to trade crude oil. Now the same thing, right? So I asked you guys earlier, which contract should you trade between gold and gold mini? Well, same thing with crude oil, because what happens is the number of lots done on crude oil is much, much higher than crude oil mini. So what I would do is, when you're starting out to trade commodities, trade crude oil mini, okay? Because then what happens is once you're comfortable with crude oil mini, you can trade crude oil. And if you look at the number of contracts traded, okay, it's decent. It's actually very good, but the value is not that much, right? So once you start trading larger amounts, it might make sense to trade crude oil, right? Because if I look at crude oil here, right, you can see that there's just a lot more volume being done in terms of value. Okay? And one last thing, guys, I talked about this earlier, but you can definitely look into this. Arbitrage is a big, big thing in India. Okay, so this is one strategy that you can kind of look into. You can look at crude oil mini versus crude oil, and you can look to arbitrage that. Okay? Now, it's going to be difficult because of the break-even. Okay? So what you can do is you can kind of start by looking at how the prices behave. Right? So one thing you can do is maybe on Monday, open up Stocks Pro and open up crude oil mini and crude oil and see how do the stocks behave or how do the prices behave, right? Which one is leading, which one is lagging, and once you start studying, the contracts, you can kind of get a sense for, which one is the major product and which one is following the other. So Arun is saying he cannot hear me. Right. You guys can you hear me now? It should be loud and clear. Okay. All right. So there was some issue with my mic. So now it should be fixed. Okay. So I don't know where I left off. I think I was talking about um, the trading strategy, right? So in India, guys, arbitrage is very, very commonly done between crude oil, mini, and crude oil, and between gold, mini, and gold. Okay. And it's also frequently done between commodity products. Okay. So what you can do is on Monday, right, open up Upstocks Pro and start looking at how prices behave between different products. Okay. So pull up all the active active contracts and simply observe how does lead move with zinc, right? Um, there will be some sort of arbitrage that's being done between a lot of these commodities products. Okay, so I'm getting some questions here. So let me answer all your questions. So I will definitely look into some sort of arbitrage strategy, okay, for commodities. And what we'll do is we'll start doing some pairs trading, between two different categories of commodities, okay. So Anil wants the break-even point of crude oil. So let's pull it up, right? We can pull up the break-even point very easily. If you look at crude oil over here, it's basically one tick. Okay, so which is not bad, right? So if you can find a 1 rupee difference between crude oil and crude oil mini, you can actually make a profit. Okay, guys, I will answer all your questions. If you have any more questions, please let me know. All right, fantastic. Okay, so that's going to bring us to the end of the webinar, guys. And now, so Karthi's asking me, in futures, a profit loss will be credited at the end of the day. Yes, it will be credited at the end of the day, Karthi. Right? So Vinay, we will have webinars on commodities strategies. Okay, so we will implement that as well. Okay. So Shamia is saying the arbitrage stuff went just over his head. So Shamia, essentially, what you can do is on Monday, just keep, a quote panel open for crude oil and crude oil mini, okay? And you can see in front of you exactly what I'm talking about with arbitrage. One will follow the other. The two products are basically the same thing. It's just like, when you open up Reliance Industries on equity, right? It's basically the same exact price. Okay, so essentially what you can do is you can try to look for a price difference. Okay, it might be hard to do manually, but at least you can get a good sense for how the prices move together. Okay, and because the price difference required is only 1 rupee, that's the break-even point. And if you can grab a 1 rupee difference, then you can make money. Okay. So Karthi's asking me whether you have to sell daily. No, so Karthi can hold on to it, right? You can hold on to the position until expiry. So Prakash is saying, is backtesting the same for cash and commodities? Yes, Prakash. Backtesting is always the same regardless of the product, right? So it can be equities, futures, options. Backtesting is always going to be the same. Guru Darshan wants a Chota class on currency futures. Sure, Guru Darshan. We could do that. Josh is saying, what's the fastest way to activate new segments on Upstocks? You know what, Josh? So you can actually use the account opening, right? Upstocks is a really cool account opening process where everything is done online. So you can just use that, and you should be able to open up an account very fast. Or do this, okay, why don't you send an email to support a trade academy, right? And we will see if we can expedite your account opening process, okay? All right, guys, so that's going to bring us to the end of the webinar, okay? Manish, so the amount you have to put up is going to be the margin, right? So the span margin, the total margin is going to be the amount you have to put up. So Garthi is saying, when is the futures and options class? Garthi, I don't follow. I don't know which futures and options class you're talking about. So one user here said, there's a saying that if we trade on NYMEX price, then we will get the better than MCX. That makes sense, right? Because the NYMEX is going to be the leading exchange, right? So MCX is definitely going to be following NYMEX. Fantastic, right? So Ashish is asking me whether you should do delivery or play intraday. So Ashish, if you're just starting out, I would just hold on to the position, all right? Maybe do a delivery trade. Don't do active day trading until you are comfortable with your product, right? And guys, commodities moves very, very differently than equities. Okay, so it's going to move very, very different. So, I mean, when you begin using it and when you begin trading it, you're going to see that prices just move very differently. So Ashish is saying, what is a preferred way to trade? It's really up to you, Ashish, right? It's really up to you. Okay, guys, now if you have any questions on Scanner, please let me know. I do want to take the last 10 minutes just answering Scanner questions. We did launch a new release today, so make sure you update the app, okay? You should be on version, I think it's version 24, and it's actually very cool. You're actually going to get a 2-day free trial of Scanner, okay? So if you're not a Scanner user, you'll actually get the opportunity to try out Scanner for 2 days. So it's very cool. And we also launched a bunch of new things, and it's much, much faster, right? So I don't know if you just download the app, okay, you will be able to update it to version 24. And if you're not a Scanner user, you can add 2 days, okay? You can basically try it for 2 days. So Nataraj is saying something very interesting. So Nataraj, the thing about news and commodities is that commodities is all about news, okay? You're not really, betting on the intrinsic value of silver, right? It's actually more about, what news is being released on silver and what's the demand supply of silver, right? So if there's any news that comes out on silver, you're sure that it's actually going to move the price of silver a lot. So you're totally correct, right? The principles of gravity will apply to silver as well, right? And of course, with gravity, we're talking about the scanner strategy of gravity, and definitely, right? So if there's positive news that comes out for silver, it's going to shoot up, and then it's going to gravity down, right? So that's going to be the principle of gravity applied to commodities. For any Google Play, app, you have to update it through Google Play, right? So Google Play. So if you go to Google Play, you should be able to update the app by going to the Play Store, right? So Karthi is asking, when can we sell futures delivery? Can we sell before expiry? Yes, you can, Karthi. So you can sell it anytime after you buy, right? As long as you sell before expiry, then you're good to go. So Josh is saying the expiry dates. That's exactly right, Josh. So what happens is there's a new contract launched for crude oil so each time a contract expires, a new contract gets introduced, right? And it's basically, it has a lifespan of 6 months, okay? So after the next contract expires for crude oil, the next contract is going to be introduced, and that's going to be expiring in exactly 6 months, okay? Prakash, it should be working. So what happens is we just released the new update. So sometimes it takes 2-3 hours, right? But you should be able to update the app. If you go to Google Play, right, you should see the update option. Okay? All right, guys. Now with Scanner, in case any of you don't know what Scanner is, I'm going to give you the discount link. Okay, Scanner is India's only algo-based tips provider. Okay, and essentially it's the best way to trade. Okay, so if you like Trade Academy, if you like the webinars, you will love Scanner. And Scanner is like I said, it's India's only algo-based tips provider, and you basically get to get algo-based tips throughout the day. Okay, so there's 6 different strategies. Okay, so let me just go through the presentation here. So Swapnil, let me go through so Swapnil is asking what's the success ratio, right? So how many of you are Scanner users? If you're a Scanner user, please say yes. Right, please say yes if you're a Scanner user. Okay, so I'm seeing a lot of Scanner users. Okay, great. Now, what's your favorite strategy, right? Is it gap, is it bounce, gravity, volcano, edge of space, or momentum? We have 6 strategies. So Vishwa is saying gap up, right? Okay, very cool. That's my favorite as well, right? Right. So there's 4 different intraday strategies. There's 2 positional strategies, right? So momentum and edge of space are the positional strategies, and we're going to be replacing edge of space with a better version of a positional strategy. And gap up, bounce, gravity, and volcano are all intraday, and you get trade alerts on your phone and on the web. Okay. So Karthi, you can definitely check out Scanner, right? And I think Scanner is going to be your best bet, right? If you want to get started, and if you want to get some sort of trades on your phone, that's going to be a good starting point. Now, if you want to learn the strategies, Karthi, you can definitely just keep attending the webinars. Where webinars are run every single day, right? Such as this one, and we also have a huge video tutorial on the Trade Academy app, right? Vishwa is asking, when are we launching commodities and currencies on Scanner? There is a plan to launch commodities, Vishwa. Currencies not of yet. Okay. And yeah, guys, we are launching new strategies very soon. So if you do want to lock in your rate right now, right, you should probably extend your membership, okay? Because the prices are so low, okay? Most tips providers charge so much. We want to make sure it's always affordable for you guys, and that's why you should just extend your subscription if you can. Okay. Very cool, guys. So that is Scanner. Okay, and let me just share the link. In case you are not a Scanner user, and lock in your rate right now before we raise prices. And use the discount code. With the discount code, you also get access to 4 Chota classes, right, with the 12-month membership. And for the 6-month, you get 2 Chota classes, right? And the performance, guys, so a couple of you asked for the performance of Scanner. So it's performing very, very well, actually. It's actually performing better than I expected. And in July, so gap up is has returned 7.5% in July. Okay, this is all like unleveraged, right? So if you want to use some leverage, you get up to 20x in Upstocks Pro. So technically it's going to be 7 into, if you say maybe 5, if you're using 5x leverage, that's 35%, right? 1 month. And over the past 5 months, it's returned 50% unleveraged. So if you use leverage, you would have actually returned 250% over the past 5 months. So it's performing very well, and you guys should know that we're launching Momentum on futures very, very soon. Okay, that's going to be the next launch. And Momentum is pretty awesome because Momentum is extremely consistent, right? You can see here, month on month, it's just doing really, really well. Now the problem is you have delivery STT, right? And delivery STT is 12.5 bips. So on equities, it's 12.5 bips, and on futures, it's 1.7% or 1.7 bips. So it's much, much lower. And so, you know, by only blocking 12.5% of your margin, you basically get 8x margin on futures. And therefore, when we launch Momentum, it's probably going to be launching this next week. You're now going to get, you know, an amazing future strategy. And for those of you that don't have Scanner, you get the trade alert right on your phone, right? As long as you have an Android app, an Android phone, you can install the Trade Academy Android version, and you get the trade alert right on your phone. Okay, so in 15 seconds, you can basically connect to Upstocks, and it makes your life very, very easy. So Karthi, it's very, very simple. Okay, so I think you're asking me how Scanner works. It's extremely simple, Karthi. You install the app, okay? You install the Google Play app, and then from Monday onwards, you will get signals on the phone, okay? It literally takes 10 seconds to place a trade. So a demo is not required, right? It's extremely simple, and what happens is if you subscribe, we will call you and give you all the instructions. Okay, so it's extremely simple, and our users really, really love it. All right, guys, that's going to bring us to the end of the webinar. It went a little overboard, right? Make sure you check out all our webinars. I'll be taking a couple webinars tomorrow, okay? So please check them out, and I will speak to you all very, very soon. Have a fantastic evening. Have a great, great weekend. You know, spend time with your families, your loved ones, go outside, and I will speak to you all very, very soon. Have a fantastic, fantastic day.